else, like, make use of it. Just because you don't have work or you're out of a job doesn't necessarily mean that it's a bad thing, although it is financially. But in terms of learning something new, like, this is the time to learn a new skill. Obviously, you can just look on the you gotta look on the bright side of everything. You can't just, oh my gosh, the world, my life sucks. Like, you're not the only one. You guys aren't the only one stuck at home. Another 2 minutes. I'm gonna tell everyone to hurry up and join because no, there's no sound right now. No sound. I'm waiting for everybody to join. I'm done. Okay, so today I want to start, obviously, by doing like a little crash course for okay, first of all, who's new? Who thinks that they are a beginner, I guess. I don't even know how to categorize a beginner. It's not that hard to learn, by the way. So you guys are gonna see, it doesn't take a fucking rocket scientist to learn. Some people just refuse to because they think it's complicated when it's not. That's my opinion.
Can I be heard?
Can everybody hear me?
Yeah.
Oh, beautiful.
All good.
Okay. All right, I'm gonna start now. Okay, you guys can hear me, right? All right, first of all,
Yeah,
Yeah.
we can hear you.
Yeah, we can hear you.
Welcome. Treat each other, nicely. If there are going to be people here who are, who's not going to learn as fast as you, and I've been having these classes for the last 4 months, and there are people who are, I'm not going to say they're slow, but they just don't learn as fast, and so a lot of people have a lot of different questions, so don't be rude to each other, because even if you already know everything, you started somewhere and you were one of those people that didn't know shit at first. So just try to help each other out if you know the answer to something, because I'm going to be asking questions during my classes sometimes. So let me load up my thing again, because it's So does anyone know how the stock market started, by the way?
No.
How did it start?
So, if you guys can mute yourselves, it's kind of like, the background noise. It's like when there's like 20 people that don't have their mics muted, you can appreciate it. So back in the 1600s, when they used to trade like porcelain and what did they used to trade? Like cotton, whatever, right? So what they did was they couldn't afford to kind of, because they used ships back then, right? They would take a ship and go to different continents, countries, whatever. And so would trade each other, whatever they had to trade. And in order to fund all these different projects or whatever, not projects, but these missions, right? They would need money, right? And how are they going to get that money? So what they did was they took it to the private citizens who actually had money, and they told them, hey, if you invest money into our blah blah blah, we're going to give you a piece of it when we make profit, right? And so that's how essentially how the stock market started, because you have all these different private citizens, whatever, they're investing money into these different products back then, and that's how they're able to get the money to get better ships, better all this, better that. Okay, that's essentially how it all started. Now, for those who are new, when it comes to stocks, okay, just like how you go to like a store, a supermarket to shop for your necessities, your daily needs, right? The stock market it's where everyone who wants to transact in shares go to. Okay, transacting basically means that you're buying and you're selling, right? For all practical purposes, you can't buy or sell shares of a public company like Apple without transacting through the stock market. So the main purpose of the stock market itself, for people like us who are willing to invest our money into these different companies, right? It's basically facilitating our transactions, right? Back then, 20, 30 years ago, you couldn't go online to go buy a share of Apple. You have to call the broker, whatever the fuck, and then you tell them how many you want, and then you call them if you want to sell. Okay? So unlike a grocery store, the stock market doesn't exist in a brick and mortar form. You can't physically buy stock. You can't physically own an Apple stock, an Amazon stock, Facebook stock, right? Nowadays, it exists in electronic form, right? So you can access the market electronically from your computer, your phone, and go about your business when it comes to buying and selling stocks, right? In terms of, so what I'm doing right now, guys, is I'm doing like a little crash course for whoever is new. I'm just going to try to explain it in a way where you can understand it in about 30 minutes, 40 minutes, an hour, right? Because I don't want to spend 2 days on fundamentals, because the past three classes I've done, that's basically what I did, spend a day or two on fundamentals. And I want to make sure that this class is going to be a really good class to where you can elevate your game no matter where you are in terms of where you stand in terms of like knowledge and stuff, right? So I don't want to just spend fucking, too much time on something that a lot of people should already know by doing research itself, right? Because believe me, not a lot of people do their fucking research. Like they'll ask me like, oh, what's a stock? Like, really, bro? Like, just go on YouTube and find that out. So, okay. So let's take a look at Apple as an example to understand how stocks move, okay? So imagine you're looking at Apple. It's 9:30 a.m. Let's say you're in New York. Market's open 9:30, and the price of Apple is at 200, right? And then let's say the company, makes a statement to the press that they have managed to find a new CEO, and that CEO is expected to take the company to the next level, for example. So Apple, as a company, is confident that the CEO's capabilities are good, and they know for a fact that he's going to, take Apple to the next level. Now, I have two questions, right? How do you guys think the stock price of Apple is going to react to this news? And if you were to place a trade on Apple based on this news, would you be buying it or would you be selling it?
Bye, Nick.
Bye.
Bye.
Buying it, right? It makes sense, right? It's simple. You're buying it because there's good news, blah 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 blah, this and that, right? It seems easy, right? So where do we fit in? Okay, every market participant, right? There's about 100 of you in here. We all have different, opinions on what certain companies are gonna do. Someone in here might think Apple's gonna go to shit. Someone in here might think Apple's gonna go to $1,000. Right? So we're all speculators, okay? Everyone's style, trading style, investing style, whatever the fuck, okay? It's defined by the kind of risk that you're willing to take in the market, okay? If you're someone who's conservative, very, very conservative, are you going to most likely be a person who's going to be day trading every fucking day and making like multiple trades a day? Or are you going to be most likely the type of person that's just, maybe throwing a couple thousand and let it sit for like 5 years, right? So that's how conservative people look at it, right? They just want to let it sit, and then they can, check up on it maybe once or twice a week and then go from there. Okay? Now, a trader like us, that's what we're doing, okay? We spot opportunities and we initiate our trades with an expectation of profitability, exiting the trade at the earliest given opportunity. Does that make sense? So we go in, try to make our money, and then we get out, right? We don't not here to buy up freaking 3,000 shares, right? We're not here to buy up 3,000 shares of blah, 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 and then, hold on. Everybody else can't get onto it. It says it's maxed out for them when they click the link. Oh my goodness. What is going on Zoom? Give me a second. Geez, there's 100 people in here. I didn't even invite 100 people in here. Puts on Zoom, huh? Give me a second. Oh, there's 6 people who's left out. 8. All right. It's fine. Where was I at? Okay, so we spot opportunities and we initiate the trade with an expectation of profitability, exiting the trade at the earliest given opportunity, okay? We have a short-term view on the market, right? This means that we have to be alert, right? We have to be on our toes during market hours. We have to constantly be evaluating opportunities based on risk and reward, okay? Risk and reward. We should also be, unbiased, right? Towards going long and going short, right? So how many of you who are already trading come into the market without expecting it to go, up or down and just trying to just ride the trend for the day, right? Don't come into the market expecting it to move the way you want to, because when that happens, you're going to fuck yourself over at the end, right? Because you're going to be too biased on where you think the stock is going to go. Okay. Now, what kind of trader are you guys looking to be? You guys can write that down. Are you guys looking to day trade, swing trade, scalp, right? Scalping obviously requires more capital, okay? Scalping requires more capital. When you want to scalp, okay, you can't be scalping. First of all, I want to make this clear, okay? When people, this is the thing, like I hear people a lot, like, oh, I'm gonna scalp this, I'm gonna scalp that, and then it's like they have $200, $1,000 in their account. It's like, well, you can't really scalp with that, right? You kind of need, you have to be willing to put on like in my opinion, this is my personal opinion, okay? If you can put on $5,000 worth of risk, make sure that risk itself is, is good for your account. So just because you have 5,000 doesn't mean you should go put on $5,000 of risk, right? So if you have like a $30,000 account, for example, 30, 40, 50, 60, 70, anything above the PDT aspect of it, then you can scalp, right? Because first of all, if you have let's say you have $25,000 in your account. Okay. If you have $25,000, how much money do you guys think, in your opinion, you should risk with a $25,000 account on a trade?
2,000.
How many percent do you guys think you guys should trade with a $25,000 account?
10%.
10%, right? 10% is good. 10% is really good. Okay, now $25,000 times 10%, that's 2,500. Okay, now if you've already been in the market for a while, you should already know that sometimes if you're if you're trying to scalp with like $500, it's not gonna work out, right? Because you're gonna end up wanting more and more and more. Because if you're gonna scalp, that means that if Apple's at 200, then you're willing to be in that trade and exit when Apple is at 200.50 or when Apple's at 201. Okay, that's already pushing it, by the way. If you're gonna scalp, don't be holding it for, some people say, oh, I'm gonna scalp this, and then 20 minutes later, I'm still in it. You're not even scalping at this point. You're day trading, right? Now, when that happens, it's like when you scalp, you're already putting on a lot of risk, right? You're already putting on a lot of risk. So why are you trying to hold it for so long? Because that turns into a day trade. And what people do is when they scalp, they want to put on that big risk, and then they don't see the stock price going in their direction. So what do? They hold it. And when they hold it and the price keeps going, in the opposite direction, they end up losing more than what they wanted to lose, because they can't face the fact that they can't just take the loss, right? A lot of people refuse to take the loss. And I'm pretty sure a lot of people here have done that before, right? You don't want to lose your money. Not even you don't want to lose your money. You want to make money. So you psychologically, you let yourself lose money in hopes that it's going to go back up, and then you make money. So that's where you fuck up, okay? That's where you mess up. That's where a lot of people mess up, okay? Now, going back to the types of traders and their styles. So day traders, we basically initiate and close the position during the day, okay? We don't carry forward the position onto the next day. This means that we're risk averse, right? And we don't like taking overnight risk, right? A day trader usually trades a couple stocks per day, right? If you guys have under $25,000 in your account, you need a cash account. So who here has a cash account? Okay. It looks like a lot of people have cash accounts. Now, who here doesn't know what a cash account is? Okay. Who here doesn't know what a cash account is? Okay, good. So a cash account, basically, you guys know how when you want to trade, you open up a Robinhood account, you open up a Thinkorswim account. Some people just go through it and don't even look at the fucking rules and shit. So a PDT account is basically what everyone starts off with, right? So it's like, other than the fact, if you already know what a cash account is, you can choose that option. But if you didn't know, basically this is what it is. So if you are under the PDT rule, this means that you can only trade how many times can you day trade per week if you have a PDT rule? 3. You can only trade 3 times in 1 week, meaning you can only buying and selling in the same day. Okay, buying and selling in the same day, you can only do that 3 times per week. Now, how the fuck are you gonna make money like that, right? Because after the 3 trades, you're forced to do what? To swing. You're forced to swing. Other than that, you can't do shit, right? So that's why they have cash accounts. Now, with the cash account, let's say you have $1,000 in your cash account, right? $1,000 in your cash account. If you have $1,000 in your cash account, how many how many percent of, I mean, what's 10% of $1,000 if you were to, day trade? 100, right? Now with the cash account, you can trade that account 10 times using $100 per trade. Does that make sense? You can use $100 for each trade. Okay, you can use $100 for each trade. I'm just making an example. This doesn't mean that you go ahead and do that. I'm just saying that with the cash account, even if you have 1,000, you can trade. You can get into 10 different trades by using $100 each, right? So $100 for each trade. Now let's say you make 10 trades, and then on 5 of them you make $50 on 5 different trades. Okay, how much money are you up? 250. Okay, you're up 250. Now let's say on the other 5 you don't make any money or you don't lose any money, you just break even somehow. So now you're up 250, but then you're done for the day, right? You now have $1,250 in your account, but you can't trade it anymore for the day. Why? Because you already used it all up for the day. Okay, a cash account, you can only use up the money that you have for the day. Even if you make money that day, you can't use that money that you made. You can't use your profits to trade again. Whereas if you have a PDT account, you can do that, right? Who has a PDT account here and knows that, okay, if you make if you have $1,000 and you make 2,000, now you can use 3,000 for the day. Okay, that's the difference, right? There's just that rule that if you have less than 25, you can't trade more than 3 times. It's a shitty rule, but they do it for a reason. They do it so that people don't end up losing everything they fucking have. Okay. Now scalping, scalpers are we're a type of day trader. Okay, because we're selling, buying during the day. We basically trade large quantities of contracts, shares, whatever, right? And we hold the stock for very less time with an intention to make a small but quick profit. Okay. For example, right? If we buy 20, 30 contracts of Apple at 200 at 10:40 a.m. and we sell at 201 at 10:42 a.m., then that's scalping, right? In 1 minute, probably made about $5,000 by buying fucking 20, 30 contracts and letting Apple go from 200 to 201. Now, although that sounds good, it doesn't is the risk behind scalping. There's a lot of risk behind scalping because let's say you get into $10,000 worth of a trade and then you're buying calls and the next thing you know, you get caught in a sell-off within the next 30 seconds. That's happened to me before. I got one time I bought $30,000 worth of fucking Amazon calls on a Friday. 0 day till expiration. That's the one I chose, like a dumbass. Okay, I bought that, spent $30K on that contract, and then a minute later, Amazon went from 1940 to 1920. Okay, I had $30,000 in there. I fucking lost 12 on that move. And then what did I do? Did I hold it? No, I didn't hold it. I just sold it. Okay, I sold it because even though I didn't know whether it was going to keep going back, even though I didn't know if it was going to go back up or not, I still sold it because I had to follow my rules, right? That's you have to follow a system. So I followed the system. And well, basically what happened after that was it kept going down. Now, if it reversed and went up the other way to where I would make money, right? That's good. Like that means like, oh yeah, cool, you made money, but I had to go through a lot just to make that money, right? Because that would mean that I had to break my rule, right? Just that $8,000 loss. I'd rather take that $8,000 loss than let Amazon let it run and for it to keep going back up, even for me to make money. But at the end of the day, I'm like, damn, did I really make a good trade, or did I get lucky because I refused to sell it because I didn't want to fact that I got caught in a bad trade and I lost this much money. No, right? I didn't even look. I mean, yes, of course, it hurt me. Like, I was like, damn, like, I really just lost this much money in like 2 minutes. But, at that point, for a fact you're following your rule. And in the next trades, right, it's going to be better for you because now that creates discipline, okay? Losing money does create discipline, by the way, in my opinion. Okay, because I used to be reckless with my accounts. I used to throw 10, 20 on Tesla, CGC, fucking Apple, just, without even, I mean, of course I did some analysis, but my risk management was so shit, right? Because last year I had maybe 80, 85 in my account. And then what I would do is I would throw, in one day, I would throw 30 on Amazon, 20 on Apple, 20 on SPX. Right? Even though I made money, but I didn't follow any specific rule, right? Rules, plural, right? I was just like, all right, fuck it. I want to make 10,000 today. So what I'm going to do is I'm going to use 30,000 so I can make, 33% of that trade, right? And understand this too, right? The more money you have in your account, the more you can make, right? So don't have unrealistic expectations when it comes to trading, because that's what pulls people into this, right? I'm pretty sure 80% of you are trading because you want to be fucking rich as fuck, huh? You see these different profits from people and you're like, oh my gosh, I wish that was me. Like, oh my gosh, I want to make fucking $50,000. I want to make $40,000. I want to make $30,000 per trade. But what people don't show you is how much they fucking have in their account to make that. Well, that's what people don't never show you, right? People don't show you like, okay, here, I made fucking $20,000 today. Okay, bro. But how much is in your account? People are like, oh, I just made $30,000 today. Congratulations to me. Hey, look at me. Right? But what is that doing to the general public, right? That's like you're giving the wrong impression of you're misleading people. Okay? I mean, although that's a bad thing, I'm pretty sure a lot of people are here because they were misled about options or misled about trading. But that's why we're gonna change all that up and make sure that you guys fucking understand that this thing takes time, work, and effort if you really want to learn to do it yourself, right? And not rely on anybody else to fucking spoon feed you and just fucking shove that down your mouth, right? Some people like that. Some people are like, oh, what do we manage my account and I'll give you 80% of the profits, right? So going back a little bit, now we have swing traders, okay? Swing traders hold on to their trades for slightly longer time durations. The duration can run from anywhere between a few days to weeks, right? In my opinion, okay, swing traders are more likely to be open to risk, right? Because if you are swing trading, you can't put a fucking stop loss on your swing trade, right? Because if the stock price goes the opposite direction overnight and you can't sell your position, you can't have a stop loss, right? That's why, like LK just fucking dumped like crazy the other day. Imagine people who swung calls, right? So nothing in this market is predictable, right? A lot of people have that misconception too. They're like, oh my gosh, they it pisses me off sometimes. Okay, I don't even want to get into that. So with options, in terms of swing trading, I always tell people in my group to at least hold it for a few days, right? And our swings have been paying off for some reason, right? I'm not even gonna sit here and praise myself saying, oh my gosh, I knew this was gonna happen. Oh, I made all these people money. No, right? It was unpredictable. All I did was execute, right? I had confidence in what I wanted to buy, and people bought it, and then they made money. So, I'm not gonna sit here and be like, yeah, you made money because of me. Well, no, you made money because of you. I didn't tell you to press that buy button, right? You pushed it. So, congrats. Now, options trading in a nutshell, for people who don't really understand what options trading is: calls, you're betting on the stock price to go up; puts, you're betting on the stock price to go down. That's the fucking simplest explanation that you can ever get, right? Don't ask me fucking to make it more complicated than what it is. Okay? An option is a contract, okay? That's why you buy contracts. An option is a contract between a buyer and the seller. The seller can be another trader or a computer, whatever, relating to a particular stock or, the buyer. This means that the buyer of the option, you have the right to force the seller of the option to do whatever the contract specifies within the period of time set by the option, meaning you don't have to wait for the expiration date to sell your contract. I know a lot of people who are brand new. They're like, hey man, I bought Facebook calls for this Friday's expiration. The first day I made about $500, but I've been holding it and it's Friday now and I'm down 700. Should I sell it? What am I supposed to answer to that? Like, right? So a lot of people don't know, like, hey, when you guys are option trading, right? You can buy and sell the same day. The expiration date is just there to show you that once that time comes, your option can expire worthless. You have to execute that at the end, right? So just the point of trading options, like what we're doing is we want to buy the contract, wait for the price to move into our direction, wait for the demand to come, which eventually, right, makes the value of that contract go up. Okay, and then we sell that contract. So, for example, when you guys are looking into your apps, right? When you guys want to trade Facebook, let's say, and then Facebook is at $100, for example. Okay, Facebook is at $100. You want to buy a call because you think it's going to go up, right? Now, there's 3 different types of contracts, right? There's at the money, out of the money, and in the money, okay? ITM, ATM, and OTM. I'm not going to go too deep into it, but I'm going to just briefly explain one is the best to buy during, what situation. Now, who here does this? Who here doesn't have that much in their account, but they want to trade big stocks like Amazon or Tesla, and instead of looking for stocks that are cheaper, what they will do is they're gonna go buy a very cheap fucking contract on Tesla just for the sake of trading that name, and then they don't make shit. Right? So, for example, Tesla contracts are like literally like expensive. Okay, they're like $1,700 for an at the money contract, meaning that's the contract that's closest to the current price of the stock. Right now, if you go in the money and you're day trading, you're essentially going to make more than if you go at the money or out of the money. Okay, I always buy at the money contracts. Okay, I always buy at the money contracts. I don't care if it's Tesla, if it's Amazon, right? Make sure when you guys are buying contracts, you also, I'm going to talk about this too. So when you guys are buying contracts, make sure you look at the Greeks of the stock. Okay, there is only 2 Greeks that I really kind of pay attention to, which is the theta and the delta. Okay, the theta is time decay. Okay, when you buy a contract, you lose money every day that you hold that contract, meaning that contract loses value every day, and you can find out how much you lose value. it says on your contract. If the theta is 0.07, how much money do you lose per day on that contract? $7. If the theta is 0.70, how much money do you lose per day on that contract? $70. Now, if you buy a contract that cost you $500 and it expires in 2 weeks, okay, 2 weeks, and then the theta is at 0.10, what does that mean? That means that you lose $10 per day in terms of the value of your contract. Now, if the stock doesn't move a cent up or down and stays the same for the next 3 days, are you holding $500 worth of the contract now? Or are you holding $470 worth of the contract now? You're holding $470 worth of the contract now, right? Now that's theta, okay? Now let's go to delta, okay? What is a delta? Delta is how much you are essentially going to make per dollar move, right? If Facebook is at $100, and the delta is 0.40, then that means if Facebook goes from $100 to $101, that one contract that you bought, right, now goes up how much in value?
40.
$40. Okay, that's the most simple way you can explain options to someone. Okay, and these are the two that you always want to look at. When I don't really look at the theta or the delta if I'm just going to day trade the stock. If I'm just going to buy it and then sell it in the next 5, 10, 15, 20 minutes, I'm not even going to care about the theta or delta. But if I'm swinging something and I'm looking to hold it for a week or two, then do I want the theta to be higher than the delta or the delta to be higher than the theta? You want the delta higher than the theta, right? Because if the theta is higher, let's say you're trading Facebook, it's at $100. You put in $500. That's the price of the contract that you bought and expires in 2 weeks. Let's say the theta is freaking 0.50 and the delta is 0.40. Are you making money every single day? No. Right? You're losing $10. Right? Some contracts have shitty Greeks, by the way. Some of them do. And, you got to make sure you pay attention to the ones that have the best ones, because that's how you can take advantage of options itself, right? Options is not just, people come into options trading. They're like, oh, I'm buy this, I'm buy that, I'm going to buy that. I know people who bought they bought I don't know what the stock was, but it wasn't a stock that anybody ever really look at. And the price of the stock went up $20, but no one wanted to buy that contract from him. He was up 400%, but he is not able to sell it. Why is that? Why is it sometimes if you buy contracts and it goes up in value and no one wants to buy it? What is the name of that? Open interest. Okay, there's a thing called open interest too. You can look at it. You can see open interest on Robinhood if you have Robinhood. This means that no one's willing to buy that contract because there's no volume in that, right? So that's why. So people ask this too, hey, why do you only trade Facebook, Apple, Google, Amazon, Tesla, HD, Netflix every day? Why do you trade? Why don't you trade fucking XTM? I'm like, what is XTM? What is that? Right? Come on, there's no volume, right? These big names have a lot of volume, meaning you won't have a problem buying or selling, right? And also understand that in the market, right? I think a lot of people have this misconception too that everyone in the market is options trading. No, option traders make up a very small fucking amount of people who actually participate in the stock market every day, right? You have people you have these hedge funds. You have these hedge funds. They're investing people's money. They're not necessarily necessarily buying contracts, right? And then you have these mom and pops, fucking at home buying, 1,000 shares of SPY, this and that. So it's not necessarily people just buying straight up contracts every day. Okay. Now, what do you guys think moved the markets? There are several, in my opinion, there are several things that move markets. Okay. Monetary policy, you can look into that. Monetary policy help move markets. Inflation, budget, corporate earnings, right? Earnings, Trump tweets, that shit moves markets, right? Markets and stocks react to events, right? Because this. Let me go back for a second. So, why do you buy stock? First of all, why does for example, if let's say all of us we all made one company, okay? Let's say our company is called PP, okay? Let's say our company is called PP, okay? Now we're looking. Well, now we're like, okay, so how are we gonna raise money in order for us to go expand and buy stuff for the company, right? What do? We come out with an IPO, initial public offering. So we go to Wall Street and say, here, this is our company. We want to take this public. Now, that's how IPOs happen, right? Now, the money that we get from investors, right? This allows us to venture out to, different countries, expanding our reach. All this money that we're getting from investors, we're able to build our company. We're able to buy more advertisements. We can buy more shit. A lot of people believe in us, right? Without people investing into the company, we won't make money. We aren't able to, buy all these things for the company, right? So technically, what really moves the market? After what I just told you guys, what really moves the market? It's deeper than just investors, right? Okay, investors move the market because we throw money in there, but it's how we feel. Okay, it's how people feel about the companies. It's how people feel about Apple, right? If people feel that Apple is going to generate a return on their share, on their investment, then yes, they're gonna buy into it. If they see that if people feel that AMD is going to be a good company, then they buy into it. So it's all emotions, right? It's not your money, it's your emotions. Your emotions, right? That's how, like, for example, you go to a store, you see let's say you're at home and it's hot as fuck. You go to Target, you see a nice fan. How do you feel when you see the fan? Like, I'm gonna buy it. I can already feel the cold air blowing through my hairs and my spine, and I'm gonna be very, very, very happy when I'm in bed and the fan is just blowing through my face, right? So that's all emotions, right? You buy on emotions. That's how people are so good at fucking selling shit too. Like, for example, if you guys seen Wolf of Wall Street, when they talk to them on the phone, what do they pitch to them? They pitch them emotion. They're like, hey, you want to make this much money? This company is fucking going to be the biggest fucking company in the world, blah, blah, blah. And then the people who are listening on the other end, they're like, oh, wow, my wife is going to be very happy if I buy into this investment. So I'm going to buy it, right? Just like stocks, right? And that's how it moves. Emotions move everything, right? Now, who are the market makers, right? Sometimes people that trade, they think that they're just buying it from other people, as in people who are sitting at home on their computers, right? Understand that there are institutions that trade, and institutions nowadays, what do they use? They use algorithms. They use they what they do is they do like high frequency trading. They fucking, they're able to get into things before you do, right? That's why when sometimes you're like, oh fuck, I thought I got in this early, but you know, it ends up selling off because the big guys who are already in it are getting out by the time you get in. Okay. Now let's go into, for example, when you're looking at companies, okay? This is what you should do fundamentally. This is what I do on my free time sometimes, okay? Now, just going back, when you want to do research on like companies, you have to find out what they do, okay? You have to understand the business, right? Even when I'm day trading, I don't just trade fucking, a random stock, right? I look at the stocks that have a lot of volume, but they also are good and the ones that are kind of self-sustainable, right? What do they manufacture, right? What do they sell to people, right? If they're credible or not. For example, if I'm for example, right now I'm looking into Tesla to go long, right? To go maybe like 6 months away. But what I'm doing in terms of research, right? I'm gonna be like, okay, I'm looking this up. I'm like, okay, how many warehouses, plants do they actually have out there, right? How many cars can they produce realistically, right? And what's the demand out there right now? If you guys don't know, electric vehicles are gonna take over. By the way, give it 10 years. You're going to see electric cars everywhere. And then you're going to see all these different fucking car companies go bankrupt. They're not going to make shit because they cannot fucking keep up. Tesla's technology is already fucking years ahead of everyone else's, by the way. So is SpaceX. But SpaceX isn't going fucking public anytime soon. So we're stuck with SPCE, which is fucking the Virgin Galactics, right? We're stuck with that. We can't even invest into SpaceX or fucking, what is that company called by Jeff Bezos? He has a space company too, if you guys didn't know. Jeff Bezos is going to be head to head with Elon. Blue Origin, there you go, Blue Origin. Okay. So you guys have to kind of understand, if you want to do like fundamental research, right? Understand what's the client base of that company, who are their competitors, who are the major shareholders, shareholders of the company. Do they plan to launch any new products? Do they plan to expand to different countries? What are the entry barriers for new participants to enter like that industry? So when you want to look at it from a fundamental standpoint, you have to, be reasonable. You got to look at it from a long-term approach. Okay. Now, going to a little bit about technical analysis, right? The market discounts everything, right? This basically tells us that all the known and all the unknown information that's in the public, it's basically reflected in the stock price, right? All known and unknown information in the public is reflected in the latest stock price. So if the stock went up $50 and we don't know why, that's why, right? All known and unknown information is basically reflected in the stock price, okay? Just understand that the how is more important than the why, okay? Technical analysts, they would not be interested in questioning why the stock goes up as long as he knows how the price reacted to the action of whoever caused that price to go up. Because sometimes you'll see fucking Tesla go up like $50 and you're like, why did it go up? Right? And then 3 hours later, you find out that Elon Musk, fucking bought this and that and that and that. But sometimes you don't know. You can't have that real time information because they're just not gonna put that out there. Okay? Prices move in trends. All major moves in the market is an outcome of a trend. So the concept of trend is basically the foundation of what technical analysis is, right? And what does history do? History what? Repeats itself, right? Price trends repeat itself. Right? So if you miss a trend and you're out here catching FOMO, right? Just know that it's going to happen again, right? It's just takes time, right? What people will do is they'll see fucking Tesla go up $5, $50 in one day, and what do? They keep buying it. They buy into it again, or not even buy into it again. They just buy into it because they think it's gonna keep going higher. FOMO. What is FOMO? Fear of missing out. This means that that little tingly feeling that you get inside of you, you're like, oh my gosh, Tesla went up $50. What am I doing? How did I not get in it? You know what? I'm just gonna buy it. I'm gonna buy it. And then what happens? Fucking goes down. Right? There is a range. Okay? There's a range where stocks move every day. Right? There's a range. How much does Tesla move on average per day? Does anyone know? Let's say $50. $50. Now, if you get into a trade of Tesla and it costs you $300 because it's so cheap and it's out of the money, and you get into Tesla when it's already up $47 for the day, and you know that it only moves about $50 a day, so now you have a $3 margin to make your profit. With a $300 trade on Tesla, what is $3 going to do? How much money do you think you're going to make with a $3 move on Tesla using $300, which is like literally $80 out of the money? You won't make shit. You will not make shit. Trust me. You won't make anything, right? Because Tesla will move $3 in like 5 seconds, by the way. It doesn't, I've seen Tesla move $30 in like a whole minute. Just seeing the candle go up and up and up and up and up without stopping. Right? That's why you have to understand. That's why people lose money too, because they don't understand the range that these stocks move in. Okay, they don't understand that these stocks, there's a certain, I'm not going to say there's a certain cap as to how much it moves per day, but based on, can you guys see my screen, by the way? I'm going to show you guys.
Yeah, bro.
I'm going to show you guys ATR, okay? This is how I find ATRs, okay? Now let's look at Tesla. Let's look at a one-day chart. Okay? Give me a second. Okay, look. From the top of this candle, 850 to 700. On this day, how much did it move? It moved $150 in one fucking day that day, okay? From 850 all the way down to 700. Now, the next day, it moved from the range is 800 to 680. Okay, that's what? 120. Now, this day, from 770 to 720. That's $50. From on this day, 820 to 750. That's what, like $80, $70. Now, if you add up these numbers respectively, individually, and you take an average of how much it is, it's gonna be like $50, $60, right? So if if Tesla's already up $50 for the day, is it a smart thing to get into calls if it's already moved up $50? No, it doesn't make sense, right? It doesn't make sense because on average it only moves about $50. So your risk to reward, right? Now it's just you're risking a bad trade, right? Now you're more likely to lose money. Okay. See, on Finviz it says $59.39, so we were right, about $50 to $60. Okay. How do you guys think you get rid of FOMO? How do you get rid of FOMO? Finbiz is a website. It's a website where you can check up all different. Here, let me show you guys. Okay, this is Finviz. Okay, you can go to. Sorry, give me a second. There you go. Okay, this will show you the top gainers of the stocks, which ones are the top losers, the most volatile, which ones have unusual volume. If you want to look at which one's overbought, you can go to here. You can go to here. You can see insider information, all this and that. Okay. Sorry, I like to do a lot of research sometimes, but okay. Now moving on. Let me show you guys something. Okay, give me a second. How many of you guys know about stock sectors? Stock sectors. There's about, what, 11 sectors out here? Yeah, there's like 11, okay? So basically, if you guys don't know what this is, you guys have to know this, okay? You can't be trading stocks if you don't even fucking know everything about the stock market, for example. I mean, you can, but what's the point, right? It's like having a Ferrari but not knowing what's in the engine. You just want it because it looks nice, because it's fast. You know how many horsepower it has, right? So the general economy and the stock market, it's organized into two different tiers. The highest tier is the sector. It's basically like a broad grouping of companies that have similar economic characteristics. Okay, there are currently 11 major sectors that most investors use when breaking down, the corporations and other issuers of securities like, stocks, bonds, whatever. Okay, sectors are broken down to subcategories that are known as what? Does anyone know the answer to this? Industries. Okay, they're broken down to subcategories known as industries. Okay, this allows a closer grouping of similar businesses, right? For example, Dollar Tree and Tiffany, like the let's use another example. Okay, yeah, so Dollar Tree and Tiffany's, for example, the jewelers. Okay, they're included in the consumer discretionary sector, but they both fall into two different industries. They're in the same sector, but two different industries. They fall into the consumer discretionary sector because they sell products that people buy. Okay. Now there is the financial sector. Can anyone name any stocks from the financial sector? There's 11 sectors total. Yeah, Bank of America, JP Morgan, Goldman Sachs, right? That's financials. Does anyone know any utility stocks from the utility sector? Okay. NEE, ENB, DUK. What about consumer discretionary? We just talked about that, right? Dollar Tree, Tiffany's, Amazon, Home Depot, Nike, Starbucks. Now there is. So let me just tell you guys first. Consumer discretionary, it basically consists of retailers. See, you guys need to know this. Okay, for example, you guys need to know this because if you want to diversify your investments, this is the best way to do it because now you know what the fuck is in what sector. Okay, some people are like, oh, I'm gonna diversify my portfolio by buying Amazon, Facebook, and Apple. They're three different stocks, so I'm diversified. Are you really diversified if you buy Apple, Amazon, and Facebook? That's not diversifying they're all in the same sector. If one goes down, the other one will go down too. Right? So don't be an idiot. So the consumer discretionary itself consists of retailers, media companies, like service providers, clothing stores, right? So these companies benefit from what? What do these companies benefit from? Anyone else?
Consumers.
Yes, consumer spending. So consumer spending, what does the economy, what kind of state does the economy have to be in for consumer spending to be high? Good. They have to be good. People have to, you know, jobs have to be good. They have bull market. Like for example, what 7 months ago, right? Seven months ago, the market was crazy good, right? So all these different stocks went crazy because the market's good. Right now, the economy is declining. All these different companies are losing money because no one's buying shit. Like for example, Boeing and Delta Airlines. Who the fuck is gonna go on the plane right now? You first of all, you can't even travel out of the country because of this virus. You know, right? They're gonna keep losing money. It's gonna take a while for them to make money again. By the way, and then there is energy sector. I don't know what falls into the energy sector. It's basically oil and gas and production companies, right? Power firms, refineries, right? So these companies, energy, right? Now, I'm going to tell you guys something cool, right? So the companies, they generate revenue that's tied to the price of crude oil, natural gas, and other commodities. Okay, so if you guys see, you know, oil prices go higher, then yes, you want to look into the energy sector if you're thinking about long-term investments, right? Healthcare. Anyone know a healthcare stock? CVS, UNH, BMY. So healthcare stocks are biotech companies, hospital firms, medical device manufacturers, like, you know, and a lot of others, right? There's a lot of different fucking stocks out there. Then there's industrials. Industrial sectors consist of what? Aerospace, defense, machinery, construction, fabrication, and other manufacturing companies, right? In general, the industrial sector, their growth is driven by demand for building what? Construction and manufactured products like equipment, agricultural equipment, all these things. When Trump wanted to build a wall, I haven't even done my research on that, but the wall, right? When he wanted to build the wall, US steel went up, cat went up, right? You guys have to pay attention to this because this is how you catch stuff, right? Then there's the tech sector, right? Electronic manufacturers, software developers, information technology firms, right? These businesses are driven by upgrade cycles and the general health of the economy, right? So the tech sector and the consumer discretionary and the financial sector all tie into each other. They move the same because they're both all three of them basically the same shit, right? If people can't buy things, then they won't, you know, if people don't go out to the stores and buy things for their home, for you know, clothes, whatever, then they won't make any money and the stock price won't go up. Okay, you got to find demand in different economic times. What's the demand for right now during this virus? Healthcare, pharma, um, face masks, toilet paper. This guy said sex. I'm done. Okay, now I'm going to talk about more stuff today, but I'm not going to go into setting up the charts. That's for the next session. Platforms. Okay, I highly recommend everybody here use Thinkorswim. If you want to, I only like Robinhood if you want to swing, right? Yeah, I'm gonna show you guys how to set up Thinkorswim tomorrow, and go into charts and stuff and setting up support resistance. Tastyworks is good too. I like the only reason why I like Robinhood, even though I've had so many headaches with it. Like, one time I spammed them like 50 times in one day. I cussed them I cussed them the fuck out, right? Because I couldn't sell my swing position for like 4 hours, and I ended up losing money. I was up 3,000, and then I ended up selling it for $200. So I told them they owed me $2,800. But only reason why I think Robinhood is decent is because how simple it is, and it's that's the reason why it's so popular, because it's so appealing to people, right? What they do is they're targeting millennials, right, to go and invest their fucking money and start trading and shit, right? They have crypto on there. It looks so simple. Like, that's why people are so attracted to it, because it looks so simple. Now, when you go to Thinkorswim, look how, okay, for example, look at my screen and look at your Robinhood screen. Which looks more complicated?
Yours.
Exactly, right? People look at this and they're like, what the fuck? Like, this is ridiculous, right? That's how they reel people into the stock market. And did you guys know that a while back Robinhood got caught for selling information to like an institution or something like that, right? So you understand that this fucking game is crazy. Like, there's a lot of greed in this game. Pretty sure you've seen it in movies. That shit's true. Okay, we're like we're like Nemo. We're like Nemo in Finding Nemo when it comes to the stock market. We're so small, we make 5,000, 10,000, 50,000, maybe even $100,000 in one day. That's still small compared to all the money that's being made, right? If you guys look and do your research, you guys would see how much money Goldman Sachs makes every single year, even every month or every day. They make so much money. They make billions a week, a month. We're over here trying to make $200 a day, 1,000 a week, right? That's nothing, right? So look at it that way, right? Don't be scared of this, okay? Because there's enough money out there for everybody. It's just that you have to just be disciplined about it, right? Know that every day isn't going to be the same, right? If you had a good day yesterday, don't expect tomorrow to be the same, right? Let's say you make $10,000 today and you're like, oh my gosh, I just made 10,000. I can do it tomorrow. So what I'm gonna do today is I'm gonna go buy some expensive ass shit, and I know I'm gonna make the money back tomorrow. So what? They go and buy some. They make $20,000 in one day. Go and buy a new car that same day. Next day they lose fucking 10,000, and they're like, oh fuck. Right? Just using that as an example. Can you guys all tell me before we end this today? Can you guys all tell me how much you guys have in your account? Like, how much you're trading with? Don't be shy. Just trying to help you guys out.
$1,000.
$5,000.
Like $2,000 barely.
$2,500.
Damn. So it's like, it varies. It doesn't matter how much you guys have in your account. Risk management, it's always the fucking same, by the way. Hold on. I'm looking for something on my computer. I don't want to end class yet because I feel like I have nothing else to do at home anyways. So I'll just talk about more stuff. It's already been an hour and a half. Are you serious? What the heck? No, I'm not gonna get into psychology today. This is first of all, this is a 30-day class, so I could talk to you for 10 hours and still not instill enough information through your heads. Okay, look. Okay, how you grow your account. I went over this with my other classes too. I went over this in each class so people fucking understand this. Okay? Don't be misled by what you see on social media. Okay? So look, you have, for people who have $1,000 in their account, you have $1,000. You put on 10% risk every trade, right? 10% of $1,000 is $100. Let's say you make 10 different trades in one day. Okay, you make 10 trades in one day, and you make how many percent of profit do you guys think is good enough?
20.
20, 30%,
30 or
10%? 10 are you 10%? 3%, 2%. Oh, I would love to see you guys fucking take profit at 2%. I would love to see that.
10% of your stop loss.
That'd be a happy day for me if I saw someone be like, "Yeah, I just took it for 2%. I'm very happy." Okay. I know a lot of people are greedy as fuck, so I can say that. They're up fucking 100%, and they're like, "Is it gonna keep going up?" Like, bro, you're up 100%. What are you talking about? You know how many fucking investors would love to see 100% return? First of all, a lot of trades that you see on Instagram when they make $40,000, you know how many fucking percent that shit is compared to what they put in? That's probably like 10, 20, 30%. And then you have people over here who are making 100, 150% per trade, still mad at the world because they can't be like that person who made 20% on a trade but made fucking $30,000. Like, come on, you traded better than that person. You taking profit at 120% is you making a better trade than the person who cut at 10%, even though they made 100 times more than you did. Just because you don't have as much money as them does not mean that you're a bad trader, by the way. The amount of money you make does not define how good you are at trading. And that's a fact. Okay, the amount of money that you make does not define how good of a trade you make. Just because you make $5 million fucking dollars a month, or doesn't make you a good trader. It just means you have money. Of course, if you have that kind of money to play with, for example, you should already be a good trader. But I'm just throwing that out there, that don't be discouraged just because you're not making as much money as the next guy, just because you don't have as much money as him to begin with. Right? So you make 10 trades on a $1,000 account, 10% trade on each one, and then let's say you average 50% profit on 5 trades. Okay. And then let's say you lose the other 5 trades, but you cut loss at how many percent should you cut loss at? Let's say you cut loss at 10%. So with a $1,000 account and you risk 10%, but your stop loss is 10% of that 10%, how much money are you going to lose max on every single trade?
1%.
You only lose $10. You're risking $10, right? Because if you have a system to where you're disciplined with it, you're gonna cut your loss at 10%. So 10% of that $100 is $10. Okay. Now let's say, like I said, you make 50% on 5 trades, but you lose the other 5 at 10% cut loss. Meaning, how much money do you lose? $50. So you made $250 on the other 5 trades, and you lost $50 On the other 5, now you make what for that day? $200. So if you're averaging fucking $200 on a $1,000 account, let's say there's what 20 there's 20 trading days in a month, right? 20 trading days. So 200 times 20 is what? What is 200 times 20? 4,000. 4,000. Now your account is at what? 5,000. Now your account is at 5,000. You do that for 2 months, your account is at what? 10,000. Now on the 3rd month, you can go risk more. I'm saying the 2nd month, let's say you only risk $100 per trade and you do that 10 every day and you average $200 a day, right? This means that in 2 months you're up to 10,000 just off of $100 trades, right? And then now, let's say you up it. What's 10% of 10,000? $1,000. Now it's 1,000. Let's say, okay, now it's $1,000 per trade, and you do the same thing per day, right? Now it's $1,000 per trade. You make 50% on 5, and you lose 10% on the next 5. You're making 2,000 a day on average, right? On average, considering you have a bad day here, a bad day there, but you have good days here, good days there. Now you're making 2,000, and then you multiply that by 20 trading days. How much is that? There, in fucking 3 months, you just went from 1,000 to 40. But no one wants to fucking look at it that way. What people will do is they want to make fucking 5,000 today with $1,000. Okay. Yeah, I mean, yeah, I understand that. Do you really believe anyone can do that? Did you guys not see my last post? What did that guy fucking start with? This guy started with $1,000. He fucking messaged me. He's like, bro, this was 2 months ago. He was like, bro, I'm up to 60. And then now he's up to fucking 90. It is possible if you stop fucking having this limiting beliefs. Like everyone just thinks like, oh, that's not possible. That's not possible. It's not possible, huh? You haven't even fucking tried it. You haven't even tried it. You haven't tried it. You say it's not possible, but you haven't tried it. Ridiculous. You haven't even tried it. Why not try it? But also understand, like, right? What you're doing, what that means is you're compounding your profits, right? You're compounding it. You're not focused on the money factor. You're not setting a goal to where you're like, oh my gosh, I want to make fucking $2,000 in every single trade, but I only have 500 in my account. Bruh, that's like a 200% gain. That's not even a 200% trade gain. That's a 200% portfolio gain every single day. Dude, it pisses me off because you guys know the average percent of, let's say you were to trade for you or to invest it for you. What do you guys think the average return is every single year on your money?
20%.
10%, 2%, 7%, 10%, 50, fucking 15%. But why the fuck do traders want to make 200% of their account every day? Unrealistic. That's how you lose money. That's you falling into what the stock market does to people, which is take your money. right? You're being greedy. You want 200% every single day when average investors who invest their money into fucking institutions where people who work at those institutions have been going to school, have their Series 7, are actual financial advisors, have all this information about different companies, but you're over here at home with your laptop, with one laptop, a $500 account, you want to make 200% per day? Come on. Come on. Not realistic. Of course, yeah, you can make 200% in one day. That's if you catch Amazon from fucking 1,000 to 2,000. Or I'm sorry, like if you catch a $100 move on Amazon, yeah, you can make 400%. But do you really expect different names, different stocks to move that much every single day? No. Right? No. You got to be realistic about how much money you want to make. That's why I just told you guys about the 10%. Right? Sir Ponderlot says, of course it's possible. Find out how with this $4,997 course, Lambo guaranteed. This is what I don't understand too. This is what I really don't understand. A lot of fucking people will literally give their money to other people who look like they're making money, Like, oh, here's 3,000. Oh yeah, well, what we can do is I can teach you how to make fucking 100,000 in a week. You know, my course is $5,000 for 2 days. I'm doing a 2-day workshop for $5,000, and you will be a fucking millionaire by the end of that 2-day period. Come on. Y'all pay $100-something for this course right here, and you're gonna fucking make a shitload of money, and you're gonna get more value than wherever you've been. Sorry, just saying. Because I don't like to see people fucking losing money. Because I've been there, okay? I've been in a position where I was like, fuck, should I go and buy courses? Should I join this? Should I join that? Should I spend $5,000 on this workshop? Then I realized, like, what I started doing was I started reading books. I started watching YouTube videos. I started doing this, and I fucking realized, I was like, all this fucking shit that they have on social media is bullshit. Bullshit. Why the fuck is he charging $5,000 if he claims to make fucking millions of fucking dollars? Why? Why do you wanna? Because understand this, the information that I have right now that I'm telling you guys, how much did I pay for this information when it comes to giving other people money? Zero. I didn't pay anybody. I didn't pay anybody. But what did I do? Who did I pay though? I paid in losses. I fucking took L's. I took L's in the market. I fucking took hella L's. I gave it all to I gave the money to the market. It's called experience, right? Fucking losing $5,000 per fucking day trying to figure out a strategy that works. That's what I paid, right? Because if I pay $5,000, $10,000 for a fucking course, that's not teaching me experience. He's just telling me, you know, what he thinks works, right? But realistically, you're better off if you pay for the experience. People are like, oh my gosh, no, I don't want to lose this much money. Well, you're gonna lose money. You're going to. This is a game of probability. There's a lot of uncertainty and risk that comes into this game, right? Your head has to be straight. Okay, you have to be mentally stable, and you have to be able to handle uncertainty and risk without expecting, a certain amount of returns, right? Don't expect to make 10,000. For example, what kind of market are we in right now?
Bear.
I mean, I guess, yeah, we're in a bear market, but what has been happening the last 4 days? It's been choppy. It's been sideways, right? Not a lot of people even understand the concept of a sideways market. What is a sideways market when you put it in fucking layman terms?
Trading in range?
Yes, it means that the price barely fucking moves. So when, for example, let me compare this to like how we did in my group, right? So January, February, and the first week of March, we were fucking killing it, right? I'm not saying we're not killing it now, but we were fucking killing it because why? Why were we killing it those 2 months? Does anyone know why?
We have a clear direction.
No, it wasn't. No, it wasn't even. It wasn't bullish. It was going down. It was going down. But why? Because it was one directional. It didn't stop, right? It didn't stop. We were fucking swinging shit, and every fucking day it would gap down, right? Did I know? Did I know that it was gonna gap down? No. All I did was follow the trend, and I executed, right? But the point is, we made money because the market was one directional. We rode the trend. Now, when we're in a sideways market, it's going to be harder because if you're expecting a $10 move and that stock refuses to make a $10 move for the day, you're not gonna, your expectations are gonna be fucking be shot out of the water, right? If you're expecting Facebook to make a $5 move, but when it's sideways, it only moves like $2, what's gonna happen? You're gonna end up getting faked out because your entry's too late, this and that, this and that. So understand that sometimes it is good to just sit out, right? Don't be forcing trades every day, but that's hard to do for people because they want to make money every single day. You sit in front of your computer, you see a fucking green candle go up, you're like, I'm gonna get in. Dude, like, understand, like, me, I don't even get in at the open anymore. It depends on how the market's doing. For example, if the market's sideways, why the hell am I gonna jump in at the open? Right? I don't know what's gonna happen for the day, right? Not even I don't know what's gonna happen for the day, but the fact that the sideways, now there's a lot more uncertainty than what it used to be, right? Because right now people are like, oh my gosh, should I be buying this dip or is it going to keep selling off? There's so many different opinions on the market right now. It's like one expert thinks it's going to go up. One expert thinks we haven't bottomed yet. Right? So you got to take that, into your trading and into what you're going to do for the day, right? You can't just expect, like, a lot of people just expect this shit to be easy every day. It's not easy. I'm telling you, it's not easy. And so this game will mess with your head every day. I've only been doing this for 2 years, but the first year I did this, I spent about 12 hours of every day trying to learn it. Like, because I didn't want to, okay, this is how I got to where I am right now, right? So obviously a lot of you guys know my background, right? I was in jail for like 3 years, whatever. It doesn't matter, right? So I can't get I got a sushi job. I was a server back then, like 2 years ago, 2.5 years ago, because I got out 3 years ago. My uncle hooked me up with the sushi job. I was a server, and I was going to the casino. I was gambling money. My friend told me, "Hey, if you want to gamble money, do the stock market." I was like, "Okay, whatever." I started doing crypto in Robinhood. I started fucking doing crypto. I started buying Dogecoin, and I started buying fucking Bitcoin, this and that, with just the money that I had left. First of all, in the 3 years that I was in jail, I only came out with $1,500. I ended up going to a fire camp where I made $1 an hour fighting fucking forest fires with the firefighters. So 90% of people who actually fight fires out there in the forest, when the forest is on fire, is all inmates. That's how they're able to fucking put that shit out so fast. Because you have thousands of fucking inmates trying to put it out, right? But anyways, that's besides the fact. So I can't get a job I can't get a job anywhere unless I know somebody. I can't just go to McDonald's right now and say, hey, can I get a job here? They're gonna be like, oh, let me see your resume. Oh, are you a convicted felon? Oh, are you this and that? I have to put fucking yes. I have to do that. So I can't even get a job at McDonald's, right? So this is what pushed me too, because I can't do anything else, right? This was my thought process. I was like, this is all I got. Like, I need to learn this because I don't know what else I'm gonna do, right? I was like, this is a good way to make money because I've seen people make money. That's how this is during the time when I was doing all my research. I was like, oh shit, this is a good way to make money. So what I did was I quit my job. I dedicated myself into this. I spent about 10 to 12 hours a day doing research, and then I started back testing different strategies, right? I went through a lot of fucking YouTube videos, all this and that, 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 this and that. I started doing all my research, and then it wasn't even until like last August or last no, not last August, in 2018. It wasn't until like September of 2018 when I finally kind of like understood everything, and that's when I started my group. Like on 2018, that's when I kind of got a better understanding of what's going on. And then that's when I kind of realized too, like, oh my gosh, the social media shit is bullshit. Like everyone is getting fucking, hammered because you got all these different people, showing them this and that and that. And then that's when I also realized like this shit's hard, right? And then yeah, that's how I started. Like I started to really, really grind it out. Like I really wanted to learn it. Like I really did, right? And yes, I took a lot of losses. Uh, I took a lot of losses, right? I was hustling. I was trying to make money here and there. I was doing little side jobs. I was driving Postmates, DoorDash, and Grubhub. I was doing this and that. I was just trying to make money to trade with. First of all, I was trying. I was literally Postmating like 30 different houses in one fucking day, and I would only make like $300. My gap, I was driving my mom's car back then. It was a Kia. I beat that thing up in like 6 months. Put in like 30,000 miles on there. Yeah, I was having all these sides just so I can, just so I can learn to trade. So that happened, and then yeah, I started my group, blah blah blah. But bottom line is, right? It didn't take me a week. It didn't take me 2 weeks to understand everything that's going on, right? Although I'm gonna try to explain it to you within the next month, like how the strategies that we use, what I've learned that can help you psychologically, mentally, emotionally, because there is a lot that goes beyond that is beneath the surface, right? You see a P&L. All you guys see are the P&Ls, but you don't see the work that goes behind that P&L, right? How is this guy able to fucking make these call outs every day and have them hit, right? Everybody wants to fucking do that, right? I'm not saying I'm like really fucking good at it, because I mean, I don't like think too highly of myself like that, but I just want people to know that all it takes is like execution, because at the end of the day, you're risking money. If you don't risk money, you don't make money. So just risk the money. You want to make money, but you're scared to risk money, so you won't make money. Does that make sense? If you're not willing to risk the money, then you're not going to make what you want to make, right? That's it. That's the bottom line. If you don't risk, you don't make, right? People are scared to risk money. It's like, oh my gosh, I have people go like, oh my gosh, I have $500 in my account, but this is all I have. I don't want to lose it. I'm just like, you don't want to lose it. You're gonna risk it. So there is that risk of you losing the money, right? So one more thing before I end it for today, right? Make sure that the money that you guys have in your account is what? What is the word that I'm going to say right now? Make sure the money that you have in your account is what?
You can afford to lose.
Exactly. Make sure it's expendable. Expendable. Okay? If you have money, this is the worst thing, and I've seen this so many fucking times. Some guy messaged me. He's like, "Hey, I only have $10,000 in my bank account. I mean, I only have $10,000 to my name, and I wanna learn a trade." I was like, "Okay, you have a trading account?" He's like, "Yeah." I was like, "How much is in your trading account?" He said, "I have 9,000 in my trading account." Does that make sense?
No.
Does it make sense to have $9,000 in your trading account with only $10,000 to your name? This is how you get fucked over in the market too. Now let me show you guys probably. This explanation is probably gonna take a while, but look. Unless he's look. So, what is the emotional attachment to this 9,000? There is a big emotional attachment to this 9,000. Why? Because this 9,000 is 90% of all he has. So of course he's going to be emotionally attached to this money. So every single trade that he makes with this account is going to make his fucking heart race. He's going to be fucking flipping bricks on every single trade because that's all the money that he has. That's how he views his money. He's emotionally attached to the money. Right? Now, every single time he takes a fucking L, his confidence level goes straight down. His confidence level goes straight down, and he's going to end up doing what after he loses a certain amount? Let's say he has this 9,000, he fucking loses 1,000. What is he gonna do on his next trade?
He's gonna go double.
He's gonna fucking double his money. Okay, I lost 1,000. You know what? That's it happens. What I'm gonna do is I'm gonna put 3,000 on there now. Then what? He fucking loses that trade, and then now his confidence level went from 100 to 70 to now 20. Now what happens the next time he gets into a trade? What happens the next time he gets into a trade and he makes money? Let's say the next time he gets into a trade, he risks 1,000 and he makes $100. What he's gonna do?
He's gonna cut it short early.
He's gonna fucking take that profit. Why? Because he's too scared. His confidence level has already been shot down. He is no longer confident in executing his trades. So what he does is every single time he turns green on his trades, he's gonna take the profit. He's gonna be like, you know what? I'm just gonna take it. I don't want to lose more. Well, Willis, the only reason why you lost that much in the first place is because you didn't put money in there that was expendable. You were too emotionally attached with that money. You are not confident. You are not able to execute. Yes, being emotionally attached to your money is going to create that fear and greed. Okay? I'm going to end it here for today. Tomorrow we're going to talk about setting up chart support, resistance levels. Trust me, when we get to the 16th of April, when I'm going to talk about like how to like develop. This is a lot of research I've been doing too, like and it works. How to develop a probability-based mind. How to be more highly effective. Trust me, like there's more to this than just your charts. By the way, there's more to it. I only started becoming consistently profitable when I started looking deeper than the surface and started really digging deep into how I'm really feeling, or this is a lot of shit. And I'm just gonna leave it at that. So next class is on the 6th. I don't even know when that is. What is that? Monday? Yeah, so on Monday, we're going to talk about setting up the charts, support, resistance level, the stocks to look for, and why. And then we'll talk about what happened that day, and we'll talk about everything else we should be looking at. And then on the 8th, we're gonna talk about day trading strategies, like the shit that we do. Entry, exits, what candles to look for, what patterns, what other indicators. And then on the 10th, we're gonna talk about scalping. On the 12th, we'll talk about swinging. That day's gonna be pretty good because swinging. Who's in the group right now? Who's in my group right now and have been killing it with the swings with us? Like this shit is crazy, huh? This the swings that we come on. Like USO the other day. Oh my gosh, USO went crazy. What else? What are some memorable trades that we took? Let me see. Let me show you guys. Can you guys see my screen?
Yeah.
Discord screen here. What went crazy? Oh yeah, before Tesla went up the other day, it went down like $50. Like that was a crazy move that we caught. Oh yeah, GLD was good. UAL, Boeing. We've been riding Boeing since fucking 200 something, and now it's at 100. So, and guys, I'm not advertising my group. I'm just telling you that, when you have an environment like this, it's like, you have like-minded people that are with you, that especially people in my group. Like I literally tell everybody like the importance of, executing. And because some like, I don't know if you guys been into like other groups, and I'm not talking shit, like I'm just saying, like a lot of people just focus on the signals. People just focus on, here, buy this, buy that, buy this. There is so much more than that, right? Realistically, just think about it, right? You guys know how unpredictable the market is, right? If you were to think about this, if you were to flip a coin and use risk management, you're gonna be profitable. Am I right? Knowing how uncertain and how unpredictable the stock market is, if you were to flip a coin every single day you trade, and you use if you use risk management, do you think you're gonna be profitable? Yes, you are gonna be profitable, in my opinion. If I flip a coin every fucking day using $5,000 on each trade and only taking 10% of my losses, I can just sit here all day and make money. And in my opinion, maybe some days I have shitty luck, but if it really boils down to it, you can do that. But no one's going to do that because everyone wants to know. Everyone, think about this, okay? I'm gonna give you guys a fucking gold nugget right now. Everyone wants to know and be right. Everyone wants to be right. Everyone wants to say, hey, I thought this was gonna happen and now I'm right. What if you take that concept of wanting to be right out of the picture and just going, and just following the trend, not caring about where it goes, but just taking advantage of what's happening in the market, right? Just think about that, right? I think that in 2 weeks, this class is gonna be crazy. But yeah, that's it for today. For all the people that is commenting on joining, just since you guys are in this class, just message me, okay? Just message me and then we'll work something out. Just DM me. But okay. Before you guys go, can you guys tell me what you guys learned today? So I kind of know that there was some value that was given today. Oh, somebody asked me what the ITM, ATM, and OTM is. So ITM, okay, in the money contracts are contracts that are above the strike price. What is it called? An out of the money contract is a contract that is what?
Way out.
Way out, right? Way out. Whether it be calls or puts. And then at the money is the contract that you see here. Let me show you guys what at the money is. This is at the money. Okay? This is at the money right here, right where it goes. This is in the money. This is at the money, right in the middle, like these two. This and yeah, these two are considered at the money, and then everything else below it is out of the money. Okay. The more out of the money the contract price is, the cheaper it is. Now, the more out of the money the contract price is, are you gonna make less or make more?
And make less for every move.
You're gonna make less, right? Look at the delta. Here, how the fuck do I zoom this in? I can't zoom it in. But you guys see the delta? Okay, look at the delta. For out of the money here, for the 500 strike price, the delta is 37. So you make $37 per $1 move. Now, as you go up here at the money, instead of $37 per dollar move, you make $50 per dollar move, right? Now, as you go up even higher, okay, you're making $64 per dollar move. Whereas if you go out of the money, you're making half of that. But look at the prices. This thing costs this. Look at this. This is fucking Tesla. And out of the money on Tesla is $1,500, whereas in the money on Tesla is $4,300. You guys see how inflated these option prices are? This thing is ridiculous. So does that answer your question on out of the money, in the money, and at the money? Okay, good. Okay, good. So at the money is what's the nearest. At the money is the strike price that's closest to the current price. Okay. Who else has questions? Is it worth buying in the money if you're certain it'll go in favor? I mean, I'm never certain. I'm never ever certain whether it's gonna go my way or not. Because if you're certain, then that means you think that you can predict the market. If I can predict the market, I would have put fucking all the money. I would have fucking $250,000 into fucking Tesla 3 days ago when it went up $100, or what was that, 2 days ago, right? No one, trust me. And by the way, guys, if you guys run into people who claim that they can literally predict the market, and they're bullshitting, because if they could predict the market, then they would fucking put everything that they have on a stock that they know for sure is going to move, and then they would literally retire off of that. So don't be fooled by dumb people. Someone asked what an ETF is. So ETFs are they're a type of security that involves a collection of other securities, such as stocks. So it basically tracks, an index, although, they can invest in any number of industry sectors or use different strategies. So ETFs are like, what is that? Mutual funds. They're similar to mutual funds, right? But they're listed on the exchanges and ETF, and they trade throughout the day just like regular stocks. What are some ETFs that you guys know of? SPY, right? BRUT, Triple Q, IWM, DIA, OIH, XLE, XLF, BBH, IYR, UNG, USO. Those are all ETFs. What is an index fund? Index funds are mutual funds or ETFs that's designed to track a specific index of stocks, bonds, or other types of investments. For example, an S&P 500 index fund would invest in all the 500 components of that market index in order to replicate its performance. Okay? I keep saying that's it for the day, but yeah, that's it for the day. Yes, every sector has an ETF. I know. You guys have a good rest of your day. Homework. Okay, you guys want homework? You guys have nothing else to fucking do anyways, huh? At home? I'll give you some homework. Hold on. How you guys month been doing? Do you calculate the risk per trade based on account value or based on how much money you put behind the trade? I'm gonna talk about this when I talk about day trading strategies, but for the sake of answering this question now, you base your risk management on how much you have in your account, on where the stock price is, if there's a range on the stock, where the next resistance or support is, where the next level of demand or fucking supply is, how the volume has been for the last 5-10 minutes, depending if you're day trading, scalping, whatever. Depends on what kind of chart you use. If you're using a 4-hour frame, hour frame, 30-minute frame, 5-minute, 15-minute. There's a lot of different factors. I'm gonna show you guys everything anyways. Give me a second. I'm gonna give you guys some videos that you might have already watched, but I want you to re-watch it because I mean I found value in these videos. Listen, stop losses. I set mental stop losses, guys. I don't set it. Okay, listen to this. How does it take for you to set a stop loss realistically if you're new or if you don't really know how to?
Couple seconds.
You have to pick where you want the stop loss to be. You have to keep referring back to the chart. So all that time you're over here trying to set a damn stop loss. You're missing out on the fucking move. Remember that. That's why I have support resistances to tell me where I should just cut the loss at. And then kind of knowing that the space between where you enter and where that support is, you look at that in terms of, okay, that's probably like 7%, 8%, 9%, 10, 15 of my contract. I mean, you know that by fucking doing this every single day. You don't just know that right off the bat. You have to literally trade and see how the movements are reflecting your what? Your P&L. Come on, guys. Come on. Don't overcomplicate trading. That's what a lot of people tend to do at first. They overcomplicate it. Literally, you put your money in, you see if it goes your way. If it doesn't go your way, you take a what? Take an L. That's it. You take an L, you move on to the next one. That's it. don't dwell on that L, because if you dwell on that L, you can take more L's. Okay, I'm gonna end this today. Hope you guys have a good rest of your day. I'm gonna link some videos in the chat so you guys can watch for today for homework. All right, guys. Let's have a good one. I'll see you on Monday. Talk about some charts. Today was just like a crash course, so it wasn't really, you know, it wasn't really much. It was just to get everybody on the same page and kind of understand. Because I want everybody here to be on the same page and not have half of you, know what you're doing and the other half is stuck because they don't know anything else. Right? You guys have a good rest of your day.